get started first, and I believe Hannah wants to start the recording as well.
Oh, Wendy, you're muted.
Okay, we start again. Hi, everyone. I'm Wendy at Divorce Thrive. I'm a divorce coach. And in my work with clients, there's two aspects that everything can kind of be lumped into. There's the business side of divorce and the emotional side of divorce. So the business side of divorce is helping the clients to choose who they are going to work with, what the legal process will look like, whether they do it themselves or work with an attorney or a mediator or move to arbitration, and all of the options surrounding that. There's choosing a financial expert, a real estate expert, etc. And then there's a parenting plan, things to consider in the parenting plan. I help them to get organized in all aspects of divorce, the separation agreement, how to speak with the children, how to maybe have that first conversation with their husband, their soon-to-be ex-husband or ex-wife. All the right questions to ask, things to consider, and to help them to get organized so that they can feel confident, be more prepared, and show up as their best selves during all of the stages throughout the divorce transition. And then there's the emotional side of divorce, which is overwhelming a lot of times. And it's helpful to have someone to be in their corner with them, someone that they can lean on. I'm a lifeline for my clients, so they can reach out at any time, and I can schedule a 10-minute chat here or there as needed. So it's about building awareness around who you are being during the process, and creating a future focused plan to guide yourself towards your perfect life in the future, whether it's 10 months from now, 10 years from now, 20 years from now. And it's a work in progress. So I meet them where they're at, and we work from there. And then one of the questions that I often get from people is, what's the difference between therapy and coaching? And I've included a little graph here. Maybe you can take a read, or it could be attached to this conversation. You can grab it later. But in a nutshell, the big difference, or the one way to look at it, is therapy is more about recovery. So diving into your past and your all of your past, and recovering that information to help you see things more clearly now. And coaching is more about discovery. So creating that future focused plan, talking about your identity, and letting go of some identity, creating new identity, how you're going to respond versus react to different situations. And that's in a nutshell kind of some of the main differences. And then there are overlaps, as you can see. And one of the great things about coaching is that you're not alone. So it's like, if you're going to start a new exercise program, it's always a great idea to hire a personal trainer. I mean, for me anyways. And it keeps you motivated, keeps you on track. Get a plan together, and someone that holds you accountable along the way. It always helps to make things happen. And then you take it comes down to you as a person, whether you're willing to do the work and take action necessary to make the changes. 18 years ago, I transitioned through divorce. had 4 little boys at the time. And since then, I've remarried. 12 years ago, I remarried. We have 6 boys. And I know that during that time, I did not have a divorce coach to work with me, but I know if I had someone like myself in my corner, I would have been able to see things a little clearer, move through the process a little bit quicker, felt more organized, and been able to feel better about myself along the way, really. So that's why I'm doing what I'm doing right now, and I'm in full time now as of January 1 this year. Nice to meet you all. And now we move towards, who's up next? Robyn. Hi, Robyn.
Hi everyone. So I'm Robyn Yack, and I'm a real estate agent with Forest Hill Vaughan. I have a business degree and a law degree, and I worked in executive level roles in my first career before entering real estate in healthcare fields. And I also went through a divorce 19 years ago with a child just under 3. And so that made me want to give back and help people going through this very difficult time. My business partner and best friend, Cheryl Koffman, unfortunately couldn't make it here today. She is a teacher by trade. She ran 2 successful businesses, 5 locations of a preschool, and 3 locations of lice removal clinics. And together we teamed up, and we are focusing on helping couples going through a separation or divorce sell their matrimonial home. So I always like to tell people that divorce is like death without the burial. For those of you who are around this table who have been through it, I think this quote really does sum it up. There's so many emotions that happen during this time. And I remember myself, there were many days, the ups and the downs, that I wished that I would say to myself, I wish that he had just passed. I know it sounds awful, but it would have been just much easier. And, you know, the good days were good, but the bad days were so bad. I cried many, many tears. And I couldn't wait till the point where I could just be at the other end of it. Things would be settled and I could just move on. So I want to start off by asking everybody a question. And feel free to just write your answer in the chat. Just quickly, what do you think is the biggest challenge for a couple trying to sell their home during a separation or divorce? And Miranda, if you could, yeah. Oh, agree. Yeah, agreeing on anything. Yeah, who gets what? Yeah. Division of the estate. Yeah, these are all, yeah, not wanting to sell. Yeah, so you're all correct. There are multiple challenges that the couple faces trying to sell their home. Who's going to live in the house until it sells? Can we agree on a price? Are we going to agree on a real estate agent? Who gets the furniture, the TV, the exercise equipment? Who's going to pay for the repairs that are required for listing? So that's exactly, and it's a struggle. It is when you're dealing with somebody who's not on the same page as you. So the first thing we tell people is to get together and agree with your ex-spouse on the date of separation and put that date in writing and have you both sign it. The date of separation determines the date when the marital property will be appraised, including the matrimonial home. So that's step 1. Then the next step is we strongly recommend that you get your separation agreement signed, if possible, before you list your property, but at the very latest by the time the property sells. If you don't have the separation agreement signed, it is very likely that neither of you will see the proceeds of your sale upon closing. The financials need to be established in order for the funds to be dispersed. Otherwise, the family lawyer will keep the money in trust until this is all settled. Okay, so now we move to your biggest asset, which is your matrimonial home. And the matrimonial home is the home where you and your spouse resided on the date of separation. And this could be anything from a condo to a mobile home. And the matrimonial home has a special status according to the Family Law Act of Ontario, and both parties involved have many rights associated with dividing this asset, and that's why it becomes very complicated. So both parties equally share in the value of this home, and regardless of whose name is on title, which is why you have to have consent from both parties to sell the property. You both have the right to stay in the home until it's sold or until there's this formal separation agreement in place. The locks cannot be changed by either party during this time. Sometimes it's necessary for a judge to grant a court order for exclusive possession, and that happens if one spouse, unfortunately, is the victim of domestic violence. And if one spouse chooses to move out of the house, that's fine. They have that right, and they're not signing away or giving away any of their rights to the value of the home. But they do not then have the right to show up at any time and come to the matrimonial home. They still need to give some notice. Okay, so now there is a difference between married versus common law, and not everybody understands that. And people sometimes think, oh, if we've lived common law for 3 years or a certain amount of time, then we're equal to a married couple. You do not have the same rights. So in common law, if you are not both on title to the property, you do not have a right to 50% of the property, okay? You only have a right if you are on title. And again, on title, you need to have an agreement that states what percentage of the property is yours and what percentage of the property is the other person on title. So it's very important for unmarried couples to be aware of this. Generally, the furniture and anything you bring into the home, you then walk away with. Some people say, well, what if I put money into the home, but I didn't log it or have a contract? You can go to court to fight it, but your best bet is to always have something in writing as to what the division of this asset is, because it can get very complicated. So if you are in a common law relationship, we strongly advise that you get legal advice to understand your rights under common law. Okay, so a couple separates and they want to dispose of the matrimonial home. There are several ways that this can happen. Obviously, the easiest way is if both parties can cooperate and they can agree on a real estate agent, and they know that the ultimate goal is to sell the property. So that's the easiest situation. Sometimes you have one spouse who wants to stay in the property and they can just buy the other spouse out, and possibly the other spouse will be in agreement of that. The third scenario is where neither spouse will agree to move out or will agree that the other spouse can buy them out. So that's where the lawyers come in, and it takes longer and it's just much more difficult. And then sometimes it gets to the point where the lawyer, it gets so bad that the court has to order a sale of a property. Right now, we have a client that we've been dealing with for 1.5 years. She actually was not on title of the property. So she does have rights to the property. The property could not be sold without her, but she couldn't put the property up for sale on her own. and the ex-husband disappeared. And so we had to go to court to have a court order allow her to sign a listing agreement to put the property up for sale. Okay. So again, everybody has to realize and keep in mind, yes, emotions are heightened. And yes, you're angry at each other, and you just, the first reaction to everybody, to each other is, I want to hurt you. But you have to remember that ultimately the goal is to make money, not revenge. It's to sell the property for the most amount of money possible so that you guys can move on and get this money to start the next phase of your lives. Okay, so now we're going to list the property, and you need to choose a real estate agent. So we strongly advise that you choose a real estate agent that is experienced in selling homes for divorced and separated couples. It's not the same type of sale as a regular sale. There is so many more things to think about and so many more things that can come up, right? So as what we always tell our clients is you need to deal with the assets. So the furniture, you can't wait until moving day and say, who's taking what, and stand on the lawn and start fighting with the movers of who's taking what, right? So you need to, the agent needs to know what to explain to you. They need to know that you have the right to have one agent or two agents, and we'll discuss that in a few minutes. You also want an agent who has experience dealing with family lawyers or mediators and arbitrators, because often if you can't agree on a listing price or the offers that are coming in, it does have to go to arbitration and mediation. And we've done that. We've had to sit in and present why this offer is a reasonable offer when somebody else doesn't want to accept it, or vice versa. You want a professional who's unbiased. So we look, everybody knows a real estate agent, and we understand that. But, I can tell you, I just sold my mother's home, and I'm going to tell you, selling properties or working with family, you think it's great, but it actually really is the worst thing you can do. And in this type of situation, it is even more heightened, because if you're dealing with people then they are biased, and it's very hard. And that's why we say to people, yes, real estate agents and your friends know real estate agents, but having somebody who is completely unbiased, who doesn't know the couple, can really make sure that their best interests are put ahead. You want somebody who's compassionate, who has empathy and can hear both sides and appreciate what they're going through. Somebody who can collaborate, because as I said, you'd have to collaborate potentially with another listing agent, and who's a good negotiator. Okay, so then you have a couple. Sometimes you can agree on one agent, and that's great. And it makes it so much easier, because that one agent will work for both parties. There's no miscommunication. And like with Cheryl and myself, it helps because we're one team, but we could speak to both parties separately and really get what their goals are and their needs are, and even their anxieties and aggravation. But sometimes you just can't agree on one agent. And it's really important, and a lot of people do not know this. I was approached the other day by somebody who is in the midst of a separation, and she's married to a real estate agent. And obviously he wants to use himself to sell their home. And I said, well, he can represent himself, that's fine, but he does not have to represent you. You're entitled to your own representation. And she did not know that. So it's very important to understand that. So if you're gonna use two agents, it's actually called a co-listing agreement. And so there's a few things that you need to understand. Each party will pay their own commission to their own agent. You need to agree on who is going to take the lead on the listing. Generally speaking, one brokerage will be in charge of putting the sign on the wall, getting the offers, putting up the listing, etc. Some couples again, who are very acrimonious, insist on 2 signs, which we do not recommend, because right away, if you have 2 signs, you're, basically blinking lights, something's going on, they're not agreeing. And the last thing you really want others to know is that you're selling it because of a divorce. But regardless, even if one party takes lead, both parties have the right to seeing the property, to have all the information, all the feedback. Both spouses need to provide access to both agents to come in and view the property and share all the information, i.e. the number of showings, the feedback, and communication with the agents. We then tell people that there's, they have to prepare the house for listing. And so they need to somehow get on the same page on these items. So if repairs are needed, they need to make sure that they're done. But it's important that they coordinate who's going to pay for that, how it's going to be done, and let their lawyers know, because okay, if they're amicable and they can each put 50-50 in, then great. But if not, if one party is paying for more, then that will get accounted for in the final numbers. They have to agree to showings. If both parties are living there, they both have to leave. They both have to allow for the times. And sometimes if you have one party that's living there, they make it difficult. So they have to allow for showings. They have to allow access. Neither party can change the locks again, as we mentioned. And this is a little bit of a snapshot of what we give to our clients in preparing their house for listing. It's a checklist that we go through with them, and we will be circulating this with the video of this webinar so that you guys can have it. It's something that we like to share with people who have attended, and it really does give you a good guideline on how to prepare your home for listing. So then, again, the goals are to remember to keep the animosity out so that you can come up with a listing price. Because if the parties can agree on the listing price, then it might need to be appraised. And that's an additional $500 fee in the GTA that is really not a necessary expense. Your real estate agent should be able to do a market analysis and really evaluate how much the property is worth. So it's really important. Our goal is to satisfy the client to get a desired selling price, get their desired closing date and deposit amount, and negotiate to work towards their best interests. As I said before, you can't wait until move out date to decide who's going to get what assets. You must decide that before closing. And keep in mind, we understand there's monetary and there's emotional value associated with all of this, but ultimately you guys have to come to some form of an agreement. So now we're just going to run through a bunch of frequently asked questions that we get with their answers. Because some people really are not aware of all of these answers and these things that come up. So does it matter whose name is on title for the matrimonial home? No, not if you're legally married. Even if I bought and lived in the house before I was married, is it considered a matrimonial home? Yes, once your spouse moves in, it's a matrimonial home. Am I responsible for the mortgage even if I'm not living there right now? Yes, if your name is on the mortgage, you are responsible for it. Will my ex-spouse pay my mortgage after the divorce? No, you may receive spousal support, but will need to qualify for a mortgage all on your own. If I paid for part of our home with money my parents gave me as a gift, do I get that back in the settlement? No, you can try and negotiate this with your ex, but courts will not enforce it. Is the matrimonial home always divided equally? Yes, unless you have a marriage contract that says otherwise. Can we have more than one matrimonial home? Yes, if you own more than one home, which you spend a significant amount of time at, like a cottage that you go to on the weekend, it may also be considered the matrimonial home. If I live common law, do I have rights to the home that we lived in for many years? No. Whoever's name is on the title of that home is the owner. Can one spouse force the other one to leave? Maybe. Both parties have an equal right to live in the matrimonial home from the time of separation, unless there's a court order in place, i.e. if there's domestic violence. So now it's time to move on. All endings are also new beginnings, and we just don't know it at the time. So it's time to move forward and look at your life after your divorce and after you sell your home. And so this is a perfect time to transition to Hannah for your mortgage needs.
Thanks, Robyn. That was fantastic. And Miranda, just to comment, you'll be at the zoo and I'll be at Wonderland, so we'll be sticking around Ontario. But may I recommend you don't go to Canada in the zoo? Just bad joke. You ever been in Canada where it's like a big hill and all you see is raccoons? It's not worth it. Anyway, okay, so those that don't know me, my name's Hannah. I've been in the mortgage industry forever, for like longer than I've been alive, I swear. 22 years this year. So I spent 14 years downtown with a lender. Now have my own business on this side for 8 years. Myself and our team here, we have a real passion for helping. It's a big joke around here, but I'd much rather be under my desk with a spreadsheet. But I know these webinars help people, so I'm happy to do them. And Miranda added here, I love talking about awards as well. So we just keep winning the Reader's Choice Awards, the Diamonds Reader's Choice Awards for our local community, which is just, we're so grateful for, because that means that we are doing right by our community, which we love. Our wonderful team. So again, myself, Hannah, we've got Barb, who's our licensed mortgage agent and underwriter, and our wonderful Miranda, who's keeping us all organized today. So there's our wonderful team. And over to the nitty gritty. Okay, so we've put together 10 reasons why you would choose our team and or a mortgage agent over going to the bank. So the number one reason is ongoing support and consultation. So when your mortgage closes, we are still with you forever until you no longer need a mortgage, because life changes, things happen, you have questions about your mortgage, you don't know who to contact, we'll always be here for you. It is our job to ensure you're getting the best rates and terms for you personally. I always say this as a kind of a joke, but it's so true. You know, if you're in the market for the most fuel efficient car and you go to, you know, Nissan and they sell you the Leaf, they're not going to tell you about Tesla, right? So we look at all of our lenders, and we may work with 20 A prime lenders, plus the alternative lenders, plus the credit unions, plus the private lenders, plus the reverse mortgage lenders. So we will look at your personal story, your short and long-term goals, and get you the best rate and terms for that. And we save you time with one-stop shopping. I mean, you could spend the next 5 Saturdays at the top 5 banks. Sounds like fun, explaining your story again and again and again, or just tell us once and we will shop around while you go back to life, especially during a separation. You're busy, you've got a lot going on. We'll take care of that for you. We negotiate on your behalf. It's a running joke that I hate calling Rogers to negotiate things, but I will take a lender to the ground to get you the best rate. There's no lenders here. Sorry, Paul, you're half, I'm sorry. So I will take a lender to the ground to get the best terms for you. And the big surprise, and we need to like shout this from our soapboxes, there's no cost to you. So mortgage agents are paid a commission by the lender for bringing new business to them. The only time we charge a fee is when we do a private mortgage, and that is notified to you upfront. And we have set fees, so there's no inflated fees. The day before the lawyer's office, we're pretty clear on that. Also, things move quickly. So we are here, the 3 of us here full-time, Monday to Friday, 9 to 5. We're moving everything along for you. Like I said, you're busy with life. You know, we get that sale agreement and the purchase agreement from your realtor, and we're hitting the ground running. Again, independent advice on your financial options and expert advice. Like I said, I've been doing this forever, through all seasons of my life. So, you know, from my first home to having 3 kids to being separated. So been through it all as well. And more choice means more competitive rates. Rates are not everything, but for example, we've got one of our big banks right now that hasn't moved their rates since December. They're having a deposit problem, meaning they need more checking accounts essentially. Another one of our big lenders who has moved rates. So we just give you those options. And again, you don't just work with me. If I'm on holiday, things aren't going to ground to a halt. You've got Miranda and Barb here as well. All right, so what is a pre-approval and why is it important? I can't tell you the number of times I have heard a client say, well, I went to the bank and, they asked me some questions and I told them how much I make and I have this pre-approval. You don't have a pre-approval. Unfortunately, if you have a purchase and it's not underwritten, right? So an underwritten pre-approval means that we have pulled your credit, looked at your job letter, look at your business bank statements. We've looked at everything to qualify your income and credit and down payment. And then we've sent it to a lender who has also underwritten, meaning looked at everything for you so that you know, as of today, should there be no changes to credit and income, you are approved for a mortgage. The big unknown in a pre-approval is, of course, the house. So we always say, once you've got this pre-approval, send us any listings you like, and we'll check the house. We'll run the house past our lender. We'll make sure that that would be approved as well. Is it today's best rate? So we have some lenders that will do rate holds, but they add like half a point, half a percentage to them. What's the point of holding that rate? We want to hold today's best rates. So we've got 2 lenders that will hold today's best rates for us. And how long is the rate held for? So our lenders hold rates for 120 days, which you think about it right now, that takes us through to, I hate to say it, but October 1st. I don't want to rush summer, but October 1st, that's a long time. That's a long time in the home buying process. And it prepares you financially for the house hunt. So of course, I've created a spreadsheet that will show, purchase price, down payment, what your mortgage will be, how long it's amortized over, what the rate is, what your monthly payment is. And then over here, we factor in closing costs, which we'll talk about in a few slides as well. So we've got, and property taxes, our estimate. We've got all the numbers there. So financially, you're prepared. I mean, I love a good kitchen too, but I'm a numbers person. I want to make sure I can afford that home, right? So this, having a pre-approval also speeds up the financing process when you actually buy it. Like I said, we've pulled credit, we've looked at your job letter. There are no surprises. We get the purchase agreement from the realtor and we're into the lender within 24 hours, if not less. Perfect. So the documents we need for a pre-approval, because they're fully underwritten, because we want to send you shopping with confidence, because we don't like surprises. Our motto around the office is plan ahead now so we don't have to put out fires later. Nobody likes that in the mortgage process. So we are going to get full documents up front from you, but also it's to save you time. If you sit down one evening or one afternoon and you get us all these documents, we're not going to say, today we need your T4, tomorrow we need your notice of assessment, next week we need a pay stub. We're going to get everything from you in one big chunk. So the online application, signed credit consent, this is important. My office, I have set the precedent that we will not pull your credit until we have your signature. I'm not doing anything on the phone. I'm not being fraudulent. I'm not, lying to you or I've seen it all. Trust me, we will have you DocuSign an agreement to pull your credit. Valid photo ID. I have not in our office, but seen it go sideways before when the client gets to the lawyer's office and they can't close on their mortgage because they didn't know they had to renew their driver's license. So again, we asked for all this up front. Income. So we work with many types of income. We've done mortgages where there's just spousal support and child support. No income, stay-at-home mom. We've done mortgages for business owners. We've done mortgages for employees using bonuses, American income. We've done it all. Down payment, again, probably the majority is coming from the spousal buyout or the sale proceeds. There might be some from savings. There might be a gift. And separation agreement, much like Robyn said, we definitely need a separation agreement. That's going to show the lender a couple of things. Number one, the split of the matrimonial home. So to verify down payment, how much are you getting from the sale or the buyout of the matrimonial home? And then if you are to pay or receive child support, are important numbers to factor into our mortgage application. All right, so let's chat about down payment and closing costs. How much do you have? We'll help you estimate that. Where should you save it or where does it go? And how much are closing costs? We'll help you estimate all these things. So let's talk first. This is one of my wonderful spreadsheets called sale proceeds. So these are super rough numbers, and we're going to go by what your realtor thinks they will sell the home for. So in this example, we're going to say $1 million. Realtor fees, typically 5% plus HST. Like Robyn said, if you're co-listing or something, it might be different, but we estimate at 5%. So you tell us if it's any different. No joke, on my first sale, this was before I was a mortgage agent, I forgot to factor in HST. So we know all this now. That was, I think that was 15 years ago when I sold my first home, or 10 years ago. Less the mortgage balance, less an estimate penalty. We'll always ask you to call your current lender to confirm, but we estimate 1% for mortgage finance companies and 2% for chartered banks. Legal fees on the sale, about $1,500, and then the profit. And then if your separation agreement says you get half of that. Now, where does this money go? If, as this is a sale, your lawyer will have the funds for you on closing day of the sale. Let's say that's going to be June 30th. Your lawyer will have the funds for you in trust that day. What happens next with the money depends on the timing of your next purchase. So if you have a firm sale and you purchase your new home and it's going to close before June 30th, say we close June 15th, we can get a bridge loan. So a bridge loan is a temporary loan to bridge the down payment. So we're going to borrow the down payment so we can close June 15th, and then your lawyer will pay out that temporary loan or that bridge loan on June 30th when your house sells. Now, I have heard that bridge loans could be complicated if you've got two people on the sale and one person on the purchase. We've done them before. So we have lenders that will work through that with us, prime lenders as well. Again, and here's the thing, it's like one bank out there may not do it. We work with a lot of the banks and a lot of the lenders. So we've always got a solution there. Another option is you purchase the same day your sale closes. So, you know, you've sold your matrimonial home June 30th, you close on your new home June 30th. Your lawyer is like the melting pot for all the money, your real estate lawyer. They'll take the money from the sale, transfer it over to the sellers of your new home. So you don't see any of it unless there's an overage, right? Another option is you haven't purchased by this June 30th date. You haven't purchased by the sale date. So your lawyer will give you the money back to do what you want with it until you buy again, right? The next slide we're going to look at is what a spousal buyout could look like. So similar spreadsheet, but we have an appraised value at $1 million. Now, I've left, this is where one spouse is staying in the home and buying the other spouse out and ex-spouse out and removing them from title. I've left realtor fees blank. This is a personal bone of contention in my book because in our industry, in our experience, an appraised value, so an appraiser is looking at 3 sold and closed comparables in your neighborhood. Typically, 99% of the time, those sold values include, or 100% of the time because they're on the MLS system, but they include realtor fees. So typically the appraised value includes full realtor fees. So we would take those off, but I'm going to leave that for you and your ex-spouse and your lawyers to negotiate. Less the mortgage balance, less the penalty, less the legal fees. There's still legal fees on the refinancing, which you may agree to share the cost of. And then the equity. And the buyout, if you're 50% of the proceeds is per your separation agreement, you're going to get $246,000 to purchase for your new home. So where does this money go? If your ex has refinanced the mortgage, so increase their mortgage balance to give you this lump sum, the real estate lawyer would have the funds for you. If your ex has used savings and not increased the mortgage, then they will communicate through the lawyers to get the money to you. And once you have the funds from your buyout, you can look at purchasing a new home. The timeline here may be a bit different. And as I said at the beginning of the presentation, I will stay in my lane as far as expertise, and I'm not going to say that I'm a lawyer, and you should trust that this process is happening and buy a home now before you have the funds in your hand. That's up to you and your lawyer to discuss. On the flip side, the last gray line is a new mortgage. If you were buying your ex out, your new mortgage would be today's mortgage plus the buyout. So your new mortgage would be around $746,000 to buy out your ex. Next, we'll chat about the top 10 closing costs. So the biggest one here in Ontario is our land transfer tax. So now this isn't your first home anymore. If the matrimonial home was your first home, you no longer have the land transfer tax rebate. So when we're estimating closing costs for a second-time buyer outside of the city of Toronto, we're going to estimate your closing costs, including the land transfer tax, will be about 2% of the purchase price. If you're buying in the city of Toronto, it's a sliding scale, so we're looking at more to 3 to 4%. So that's why it's important you send us the listing when you're shopping, so we can say, oh, you're looking in Toronto, oh, you're looking in Pickering. That's going to change the costs, right? And maybe increase or decrease your down payment. Tax on mortgage insurance is only for putting less than 20% down. Of course, legal fees, costs for newly constructed home. I can spend a whole day here. What I would say to you is if you're even looking at a new build, schedule a call with me first and I'll go over some tips with you. Prepaid costs and adjustments. So that's like the seller paid the water bill for the month. You owe them property taxes. That's the lawyers going back and forth. Number 6, home inspection. If you want to get a home inspection, that's one of our closing costs. Home fire insurance, much like you had on your matrimonial home. Title insurance is mandatory for all mortgages in Canada. Appraisal fees. So sometimes the lenders will approve the property through their internal appraisal method, or what we call an AVM. Otherwise, we need a third-party appraisal, like Robyn said. That's about $500. And then, of course, moving costs. Next, we'll chat about credit, and this is kind of irks me because it's a secret and it shouldn't be. So please listen to this part and share all the good news. So we're going to look at what is a good credit score and what does a lender look for on my credit report. Okay, my favorite free credit report service is borrowwell.com. It's linked with Equifax, who is our biggest credit reporting agency in Canada. We also have TransUnion. So if you're with certain credit cards and banking companies, they link through Credit Karma. That links to TransUnion. 99% of our lenders use Equifax. Equifax and TransUnion should be the same, but they're not always. So sign up for free at Borrowwell. They're going to try to sell you lots of credit cards. Ignore that unless I've told you to open a credit card. And once you get in there and download your report, feel free to email it to me and I'll give you any personalized tips for how you can increase your credit score. At a high level, you want to know what your credit score is. To qualify for an A prime mortgage, we're looking at a credit score of about 680 to 720 and above, but it also depends what's on your report. I want you to make sure your name, address, employer, date of birth, and all your debt obligations are correct. And by debt obligations, I mean what trades are reporting there. So credit cards, OSAP, car loans, even cell phone, telco companies started reporting to our credit bureaus like 10, 15 years ago. This may shock a lot of people, but you only need 2 to 3 trades or credit products reporting well over 2 to 3 years to have good credit. So trades could be a credit card, a line of credit, a car loan, things like that. But here's the thing, and I'm boring when I say this, I have had the same credit card and line of credit since I was 18. I don't chase points. I don't close things and open things. I just want to maintain the length in my credit history. When you have a car loan for 5 years and you pay it off and you open a new one, that's now closed and you're starting again. When you have a mortgage and you switch lenders, that's closed and you're starting again. When you switch TELUS, I mean, it doesn't report the same as a credit card, but when you switch companies, it's closed and started again. So you're starting your credit again. But if you have a card for the long run, that's what we're looking for. And reporting well means no missed payments. It's harder to recover from missed payments than it is utilization and things like that. And so my tips are to pay at least your minimum payment every month and on time. I read a book about automatic finances a few years back, and I didn't know this, and now I know, always learning. You can set up your credit cards to have either the full balance or the minimum payment come out from your bank account every month automatically. One less bill to pay. I got 3 kids. I can't keep track of all this. So it's easy and fantastic. And utilization. So Equifax changed our scoring system about 6-7 summers ago to something called Beacon 9. What it means in layman's terms is it's the first time they've updated their scoring system since the 70s. And we use credit cards a lot different now. So utilization is one of the top ranked things below, missed payments and collections and things. So if you can't pay the full balance off every month, what you'll see on Borrowwell is a utilization tracker. It adds up all the limits for your debts, revolving debts, credit cards, lines of credits, and all the balances. And we want to keep that below 30% over the long run to have the highest score. If you're over 30%, that's our goal, to get it down in total. I share these credit tips from a place of, I have seen spouses come to me for a mortgage and they don't have credit at all because they've been a stay-at-home parent, because they haven't worked, because one spouse did all the banking. So if you have if you need any help on getting started with credit, again, schedule a chat and I'm happy to hold your hand and walk you through it. And I'll wrap up my end of the slides with just call us, book a time to chat. I mean, we have a 10-minute quick call. We have a 30-minute deep dive discovery call. No matter the point you are in the process, you don't need to come to us perfect. You don't need to come to us and worry about being approved or declined. We will get you there. I'll say you don't know where you're going until you know where you're starting. So once we know where you're starting, we can hold your hand and give you that action plan to get you to the end. So now I'm going to move over to Wendy to wrap up her end of the seminar. Thanks, everyone.
So we're going to leave the last 5 minutes open for some questions and discussion. And I'm going to wrap it up with float through these next few screens, Miranda. And just divorce can be an overwhelming life transition. Emotions are flying high in every direction, making it impossible to think clearly for yourself and make best decisions for yourself on your own. It's great to have your buddies and your friends in your corner, your family. It's perfect. But it's very important to gather the professionals, the experts. You've met a few of them here today, myself, Hannah, Robyn. Gather these people in your corner. They can help guide you in the right direction, help you to see things that you can't see. Times are hectic, and it's been a pleasure meeting you today. We now let's open it up for some questions and discussion.